What's up, everyone? Welcome to my first crypto analysis video. I'm gonna start right away by talking about the total chart, as you all can see here. What basically happened that by the end of last week, if you zoom out, right, what did we have? We have a double top on the total three chart. So what is total three? It's the crypto market cap excluding Bitcoin and ETH. So basically, all of the Bitcoin, all of the altcoins market cap with the exception of ETH, right? So the interesting thing about what happened here is that if you look at the double top, whenever you have a double top, what happens? You have a pullback, right? Because it's the all-time high. Once you reach the all-time high, you are expecting to have a pullback. And if you zoom in here, you'll notice that UE had this huge dump, which led to obviously a lot of liquidations on Monday. A lot of people freaked out. A lot of people were like worried about what's going to happen. What am I going to do? Is it over? Is the bear market starting to reach the top? Is that it? No, that's not what happened. This is just a normal pullback after a huge rally that started after the election of Donald Trump on November 5th. Okay? So it's that simple. It created this gap here, which means that the price went down really quickly. So now it's going to try to fill it back up. Now, what's interesting about today is that today was CPI day. Okay. So it's the day where the inflation data goes up. And last month, let me go back to the big Bitcoin chart. Last month, what happened was that CPI was here on Wednesday the 13th, and it was 1 week after the election. We had this huge rally after the election. And right on the day before CPI, November 12th, we had this small consolidation. If I go to the hourly on that day, on November 12th, here, you'll notice that we were ranging. It was an okay range, right? But then on Wednesday, what did we have? We had a quick spike. So let's go here. We had a quick spike where price ranged between 86 and 93, right? So it was around a 9% range. But this is what's probably happening today as well, because Monday we had this huge dip. Tuesday was just a consolidation. And now, after the CPI report went in the morning on 8:30 Eastern time, we jumped up until 101K. Okay? Now, how can that be explained? What does CPI have to do with these spikes? The idea is, but because the inflation data has not been looking so good, the Fed want the inflation data to be around, the inflation report to give you an inflation metric of around 2%, right? That's what the Fed wants. But it's been getting at like 2.4, 2.5. On November, it was like 2.6. Okay. 2.6 was a little bad because it was far from the 2% that the Fed wants. And today it was 2.7. So what do these metrics mean in terms of price? What it means is that there was some sort of prediction by the market that the inflation data was not going to be that good. Okay, it's not going to be 2%. So they stayed sidelined here and here, waiting for the inflation report to go up and to get confirmation, right? So what happened here was that we had sell the rumor, buy the news, basically. So which is the opposite of buy the rumor, sell the news. So because they were a little worried about the inflation data, we had some sidelined. some people sold early because of they were front running the inflation data, right? So let's talk about the two cases, the sideline and the front running. So the front running is because you have an expectation that the inflation report is going to be bad. How? Because of research, of analysis, because people following the data every day. So they decide to sell early because they know it's bad. This is the front running. The sideline is that some people were just waiting for the inflation data to show up so that they will then see how they're going to act accordingly. Now, you might say, but inflation data is bad. Why would they buy here? It's because they noticed that no one is selling anymore. There's not any more sellers. There's a lack of supply of sellers. So when the inflation data went up, there was no selling pressure. So price just spiked up. And this was kind of expected because I was staying in the morning waiting for a good opportunity to get in with a leverage trade on Cardano because I knew this spike was going to happen. Because this is what happened back in November. Now, is that what's going to happen in January? No, not necessarily. Well, because I've been following the prices, and I noticed that this consolidation here was not expected. It came like out of nowhere because we had a very strong momentum all the way after the election. But this here was just a range, which if you keep following the price throughout the whole day, you'll notice that it was kind of like waiting for something, which was the inflation data, right? So what happened here was we had this big dip on Monday, especially for alts. Lots of people got liquidated. Then we started ranging here, but we were ranging as we got closer. If you were following the price, so if you go down to the hourly, you'll notice that Bitcoin from yesterday night was just trending up. So we have a low, we have a high, we have a higher low, higher high, higher low, higher high. We were just going up until the inflation report, which was on 5:30 PST today, so somewhere here. Okay, I mean, you notice there was a spike after the announcement, right? So if you were able to apply the analysis of November here, you would have been able to make some money. Okay, so keep that in mind. Let me see if there are any questions in the chat. No, there are no questions. Okay, back to the analysis. So if I look at the total 3 again, back to the daily. Again, we had this huge dip here. Lots of people got liquidated. A lot of people freaked out. We have an indecisive candle. Basically, nothing happened. It just stayed where it is. And then when I zoom in, I'll notice that, again, starting yesterday, we were trending up. So a low, a high, higher low, higher high, and just kept pushing. Okay. So remember, this is our double top here. We already reached the top, so it's going to be much easier for total 3 to go past it once it reaches it again, because all the sellers that were positioned here were already taken. So keep that in mind. Another idea and another metric that you could have kept in mind as to why you should have just bought the dip here. This was a buy the dip event. Again, nothing I say is financial advice, but from a technical analysis perspective, remember, let's go back to Bitcoin. Remember that people get paid towards like the end of the month, so whatever, 26, up until probably the first week of the month, so the 7th, right? So when you have a highly trending cryptocurrency narrative, which is what we've had since Trump got elected on November 5th, when you have this, you expect retail, so common people like me and you, to take part of their paycheck at the end of the month or at the beginning of the month, so depending on when they get paid, and put that into crypto, right? So this is why it's important that you keep following the price, because after Thanksgiving break, on Monday the 2nd, after that, we had a huge push up all the way to 103, right? But it only stopped when? On December 5, right? So now you might say, oh, but it kept pushing here, but because it reached the top here, okay? So that's what I mean. So you can look at it from the fact that it dipped here, which led to it going up. But the idea is that we did not expect the price to just stay in such a range. So it didn't go up as much as we expected it to go up. Yes, we did break 100K, but the expectation was that once we break 100K, sky's the limit. Why? Because we had a lot of resistance at 100K. If you remember, if you keep following it, we had a lot of resistance at 100K. So after we break that resistance, we probably ran out of sellers, and we expect the price to keep going up. But this did not happen. Why? Because some people were front running the bad inflation report, right? So we were expecting the price to keep going up, and we were expecting people who were getting paid to put in more of their paycheck into Bitcoin or alts. This did not happen because there was some front running of the CPI inflation report. Okay? Now, here is where the inflation report went up, and probably expect those who were sidelined to just jump in now. So the people who got paid were waiting. They were sidelined till CPI day to make the decision they want to make. That's my interpretation of what happened. I could be wrong. Okay. Now this is obviously the CPI days. So November 13th was the one where I showed the spike. Today is December 11th. The next one is on January 15th. Okay. So you want to keep that in mind. You want to keep the CPI day in your mind. Now, what's the next date to keep in mind? The next date to keep in mind is December 18th, which is the FOMC meeting, right? So where the Federal Reserve are going to make their meeting, and they're going to decide on whether they're going to cut interest rates or no. So if I look at the FedWatch tool, you'll notice that there's around a 95% chance that we're going to have one rate cut. So the rates are going down from 4.5 to 4.25. So what does that mean? It means that the moment the interest rates go lower, more liquidity is going to jump into the market, which will increase the supply of dollars, which will then what? Increase the price of assets, including Bitcoin and alts. Now, what you should be doing is that you want to think, do you want to front run that or not? A lot of people say that you should not wait till Wednesday to buy because some people are going to front run that. They're going to buy before the interest rates are cut. So by the time the meeting happens, we will have a sell the news because people who needed to buy had already bought. So they would just take profit. This is a little misleading. Why? Because yes, that can happen. But remember that the increase of supply of dollars happens after the meeting, right? So you cannot front run that. You cannot like so it's only after the increase of supply of dollars that the assets will become more valuable, right? So you want to ask yourself, is the sell the news going to be stronger than the increase of supply of dollars? In the last two meetings, So on November 7th and September 18th, when we had our cuts, we did have green days. You notice price went up and price went up. We had green days. So I expect probably that to be the case again, because it's only after the interest rates are cut that more money will jump the market. And also, some people are still not sure because there's a 5% chance that the cuts will happen. But I guess they most likely will, not because it's only 95%, but because these interest rates are too high. A lot of people got laid over because of the high interest rates. People need jobs. Tech companies rely a lot on cheap debt, so they need lower rates. Trump likes lower rates. Republicans like lower rates. So it's really all metrics point to the idea that we will have rate cuts coming. So keep that in mind. Okay. As we are on the way to the day, you can front run that. You can find good entry points. Wait till we have some price correction or something, some dip somewhere that you can use. Then you can use as an entry point. That's a good strategy. You can make the trades you want to make up until this date and then just get in. Yeah. But the whole idea is that you do not want to be bearish here. That's really important. Don't freak out if a small dip happens. We are still in a bull market. The daily bands are green. We are $15,000 above the 50-day moving average. So just don't freak out. When I look at total 3 again, here, this was just to buy the dip. So as I mentioned, this was a good opportunity for you to buy the dip. A strategy I liked was that you can hold spot, keep holding spot so that you avoid getting liquidated. And then once the dip happens, you can switch to leverage trading. So you sell your spot, you buy it with leverage, so that once it goes up, you're making more money. So that's a strategy, right? You have to manage your risk accordingly. So I'm keeping that strategy in mind. When I look at Cardano, so obviously what happened with Cardano is that we had this huge dip with similar to other alts. The good thing about this dip is that it stayed above the previous swing low, which was here. So when it comes to trending, price usually trends as long as you do not retrace the whole thing. Now, some people will tell you anything as a rule of thumb, anything below the 0.618 is considered like the end of the trend. But again, it's a rule of thumb. So some people like to use the 75. If you take the fib tool as I did, so you take it from swing low to swing high, you'll notice that price went down all the way to probably the 90 something percentile, right? So it did not retrace the full move, so that's good. It went now back again above the 0.618, so you can consider this as a false breakout. But we do not have enough evidence to say that the trend of Cardano has ended, which is good. So we have a big gap created here. And look at what happened today. The gap got filled. So let me take this line here at $1.12. So what happened was that price went down really quickly on the daily, right? Yesterday we had a consolidation. Today in the morning at around 4 a.m., when I was getting ready to make my trade, I was getting ready for CPI day. So I wanted to make sure I was in. My only issue was that I didn't know at what good price I could have gotten. So if I go down to the hourly chart, and you see this is my trade here. And look at the hourly, you'll notice that Cardano pumped crazy at around 4 a.m. PST, so Pacific time, went all the way to the 100-day moving average, the 100-hour moving average at dollar, and so it kept pushing, 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 pushing. You'll notice that Cardano pumped before everything else. So what was that? This one was, so maybe you can technically say it started at like 2 a.m., but this huge candle happened at 4 a.m. When I look at Bitcoin, I noticed that it happened an hour later. So actually, it had a, when an hour later, actually, it just went up from 98.2 to 98.9. Then we had another huge one, till it reached like a top at 8 a.m. at 101. But with Cardano, everything was an hour early, right? So, which is good, which shows that there's interest in the coin. People want to buy it. People thought of buying it before they wanted to buy Bitcoin, which is good. So, what happened was, if I go back to the daily, we had a huge gap here. So, which means it's an inefficiency, which means that price went down really quickly, creating this gap here below these wicks. So, as a rule of thumb, you expect that price have a tendency to fill up the gaps. So price is going to come back to these levels to fill up the gaps. And that's what happened. It pumped all the way to exactly where the gap got filled. So there was a lot of sellers here at $1.11.4, $1.12, you can say, which is why price retraced back now to $1.07. So this was a good trade. I didn't sell. I'm kind of waiting till the FOMC meeting on next Wednesday. I'm trying to avoid these crazy, like, high frequency trading aspects. So, but yeah, this was a, there was a lot of traders obviously positioned here because they want to fill up the gap. So Cardano is still trending, which is good. You can definitely argue it's still trending. This is just a higher low. Now we are just on the way back up. So remember, in the bull market, every dip is an opportunity to buy or the beginning of the end. We are still not too early, but remember, if you're looking at if you're looking at the 4-year cycle of Bitcoin, which tells us that Bitcoin, let me zoom out, go to the weekly, which tells us what? Tells us that Bitcoin tends to top at the end of the year following the election year. So the year after the election year, the year after the Olympic year, the year before the World Cup year, whichever way you want to understand it. Okay? So what we can see is that Bitcoin topped on December 2013, right? Then it topped again on, if I zoom in, December 2017. Then it topped again on November 2021. So if you use this metric and use the fact that the federal government is going to keep cutting rates because the rates are really high, they are still like above 4%. That's really high. During COVID, they were 0%. That's why a lot of people were getting hired, even though there was a lot of, obviously, business getting closed because of the virus. But a lot of tech companies were hiring a lot of people for crazy wages. So because the interest rates are expected to go down even more, because so far the 4-year cycle has been working because the year of the election year is the halving year. So you are still like a little early. You still have around 9 to 12 months before the bull market ends. Okay, so you don't want to freak out here. You don't want to be like, oh, this is the top. I need to sell. No, be careful. So we have the FOMC meeting next week. Again, because people get paid at the end or at the beginning of the month, we expect that days from like 26th to whatever, the 10th to be like the highest buying. The obviously because price didn't go up much here, probably because of CPI. We expect that there's still people sidelined. And because there's the FOMC meeting that will pump more liquidity into the market. You do not want to be like, oh, it's the middle of the month, I should sell also. So be careful. Keep that in mind. So is it worth it that you make a risk because of you don't want to wait 1 week? Probably not. Okay, so keep that in mind. Let me check if we have any questions. No. Okay. Yeah, I'm bullish on Cardano. It's just keeps trending up. We are still around 60% below all-time high, so that's good. We remember that remember that with Cardano the pump started to happen because of the rumors that Charles Hoskinson, the founder, would become like a crypto advisor in the Trump administration, and then went on YouTube and mentioned that, oh, I'm confirmed I'm going to be working with legislators in DC on the crypto policy and all of that. So this is going to be a continuous narrative. Okay, it's not just like a one news thing and that's it, because he then mentioned that he went to SpaceX, but he couldn't talk about it because of non-disclosure agreement. He probably will end up talking about it when the new year begins. So once he starts taking photos with Elon Musk, Donald Trump, these are all bullish catalysts and bullish events that will hopefully drive the price up even more. So you want to keep that in mind. You can always check how the meme coins are doing for Cardano. So Snack is the number one meme coin right now in Cardano. And it was doing really well in the past month. So it went up 4 times. Right. I remember like during the summer it was below 1, below 10. So it was 3 zeros. Yeah, here. So, there's this big pump. Again, this is just a higher low here. You have Husky. You want to keep those in mind. Yeah, Husky's low cap. So you want to relate this with what happened in the Solana blockchain with the Bonk coin. Because what happened with Solana was that as Solana started going up, it created a narrative that, oh, Solana is doing really well. This is when the Bonk coin, which is the main meme coin on Solana, started going up, which drove the price of Solana up even more, which drove the price of Bonk even more. So we had all these cases where positive loop, this narrative drove this price up, so this price up narrative drove the other one up as well. So this could happen with Snack on the Cardano network, especially that Snack is deflationary. So the coins are getting burned with time, so reducing the supply. So that's bullish. And yeah, Cardano's trending up. It went up around 3x since the election, from 32 to, if you consider this week, then it went up like 4.5x. So yeah, we'll see. I'm just bullish. As long as it keeps making higher highs and higher lows, then we're fine. Because look at what happened in 2020, actually, and this is the example I really like to give. Obviously, history doesn't repeat itself, but it rhymes, as they say. You just wanna like keep in mind what happened before, and then try to look at some patterns. So what happened back in 2020, 4 years ago, again, because we're assuming the 4 year cycle, right? The election was somewhere around here, probably the Tuesday, so it was here, November 3rd. Cardano was at 9 cents, rallied up, saw it ranging, rallied up. Then it ranged for a whole month, the whole month of December. Rallied up in January, ranged for like the remaining of January, and then in February it just pumped hard to where it broke the $1. From 9 cents to $1 in 2.5 months. So, or from 9 cents to $1.50 in 3 months. Okay. So that's around 15x. So far, we've been around 5 weeks after the election, and we're obviously we don't expect a 15x because the market cap is now bigger, but we probably expect less than 15x, but we don't know how much less. So far we've had a 4x in 5 to 6 weeks, right? Keep that in mind. When you look at the ADA BDC chart, so how ADA is performing with respect to Bitcoin, it's interesting is that here we kind of reached the previous swing low. So we're going to probably have to keep in mind that. But is Cardano going to keep trending with respect to Bitcoin? Because what happens usually is that Bitcoin leads and then everything else follows. But because of this whole crypto policy narrative, so Bitcoin here was rallying, but then the crypto policy narrative 2 days ago started pumping the price up. So would that outweigh the pump in Bitcoin? We'll see. Cardano has a smaller market cap, so has more potential. But we need to keep following, see how the narrative is working. Make sure that Charles Hoskinson is actually going to be part of the Trump administration. When you look at ADA ETH, so what happened with me personally is that I actually bought a lot of ETH on August 5th when the Japanese carry trade crash happened. Back then, Ethereum was the one that went down the most from the major coins. Went down like 20%. And this is because a lot of retail like Ethereum. Almost everybody has Ethereum from the previous cycles, the NFTs and all of those, the meme coins. Almost everybody has ETH. So a lot of them, there's a lot of people trying to long it, all these people losing a lot of leverage because they have hope that it's just going to follow Bitcoin. And when the Japanese carry trade crash happened on August 5th, ETH went down really hard. Actually, you can see it here. You can see that the ADA ETH chart was bullish. Right here, there it is. It went really up. Went from 12 and a half to 15. This is because ETH went down really hard that day. So it was a Sunday in California. So if you were just following quickly on the phone, you could have gotten good entry points for ETH. So what happened was that I bought a lot of ETH, but when I noticed this pump in Cardano, I just sold all of my ETH into Cardano. And around 26, so I'm still good. So you'll notice here that ADA went down more than ETH. So this is because the ETH ETF effect is playing its role. So if you go to the ETFs, you'll notice that Bitcoin is doing really well, even when all these negative sentiment was playing at the beginning of the week. But Bitcoin ETFs was strong on Monday and Tuesday. The ETH ETFs were also strong. So we had the second largest ETH yesterday day inflows. So there's still, so obviously because Wall Street exposure of ETH is helping it now. It wasn't doing well. The ETH ETF wasn't doing well before, but after the election, after Trump won, the investors saw that okay, Bitcoin went up already, really hard. So let's put in some money into ETH because ETH was really lagging. ETH was actually like a complete piece of trash at some point. Everyone was just hating on it. So investors are putting now a lot of money into ETH because it has the ETFs in Wall Street, so it has the attention of huge companies, of hedge funds, of all these software engineers working on the stock market, and this is obviously helping it keep support. So, but yeah, we'll see how Cardano is gonna play with respect to ETH and Bitcoin. Obviously, the meme coin narrative will help it, and I mean, last cycle it had two good runs, right? I remember when the May 2021 dip was happening. So when back when like all the coins were getting crushed, ADA did well for some time here. Obviously, as Bitcoin keeps going down, so Bitcoin went down 50% that month, so I just can't hold it too much. But Cardano on May 2021 was able to hold it for some time before it ended up just following the crash. So here, yeah, because the crash started like back in end of April, but Cardano kept rallying up. So it had this first run, dipped down with a consolidation, then pumped really hard when the Alonso hard fork was announced. So yeah, I guess that was my first crypto analysis on YouTube. Obviously, you're always welcome to ask questions. Let me know if you need anything. And I'm always happy to share with you my opinion. So again, nothing I say is financial advice, but you're always welcome to ask me whatever you want. So that's it, and I'll see you all in my next stream. I'll probably aim to have like 2 streams a week, obviously depending on if big events happen. And you have a good one.